This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the global bond market is rallying. Prices are up and yields are down, with traders now pricing in 3 US Fed rate cuts before the end of this year. There is a sudden risk-off mood appearing today. And we should remind ourselves that the Northern Hemisphere is well into its summer vacation season. Markets are relatively thin, and this is when changes can get amplified. Silly season news as usual fare, food scares and catastrophes, for example, although this year it is rather dominated by the Olympics. But first up today, we should note that American initial jobless claims came in slightly higher than expected, 249,000 on a seasonally adjusted basis. This rise attracted the headlines, but on an actual basis they were in fact lower at 215,000, a decrease of 10,000 from the prior week. There are now 1.94 million people on these benefits. Their July job tally was unusually low at just over 25,000. However, the same report suggested new hiring activity was low too. Tomorrow's July non-farm payrolls report is still expected to reveal 175,000 jobs expansion. Also low was the widely watched ISM factory PMI for July. The extent of the retreat was more than expected, the sharpest contraction since November 2023. Sinking new order levels was a key cause. Falling new orders were also a feature of the internationally benchmarked S&P market PMI version, although they do not see the American factory sector contracting there. Both versions reported lower inflation pressures. These reports have pushed Wall Street sharply lower today. Globally, there were a number of factory PMIs released today. In Europe, the contraction was unchanged. In Japan, their marginal expansion slipped back into a marginal contraction in July. In India, their strong expansion continues, but now features very frothy inflation. South Korea said they are also holding a good expansion. In Taiwan, they're getting good sustained expansion. In China, it's back to a minor contraction as new orders fall away. And the fierceness of the housing falls in China was on full display again in July. The value of new homes sold by the top 100 developers fell 20% in July from a year ago. Sales fell 16% in June on the same basis. The declines in prior months were of the order of 30 to 40% lower. In Europe, the English Central Bank cut its policy rate by 25 basis points to 5%, but that was as expected. In Australia, some heat seems to be going out of some residential real estate markets. July prices actually fell in Melbourne, Hobart and Darwin, and were no change in Canberra. That only leaves Perth, Adelaide and Brisbane with rising prices. Sydney rose too, but only a minor 0.3%. And perhaps we should note that ANZ's purchase of Suncorp Bank, now finalised, has shifted ANZ ahead of NAB in market share for mortgages in Australia. ANZ is no longer fourth. It is a ray of good news in the shadow of the bank's bond market manipulation scandal there. And the heat is going out of the Australian factory sector with a spreading contraction in July. Output, new orders and employment were all retreating faster. However, the Aussie merchandise trade surplus rose in June to $5.5 billion. No surprises there. But interestingly, there are some stresses beneath the hood. They are seeing the falling global steel price hit some reasonably significant aspects of their terms of trade. Iron ore prices fell 9%, coal prices were down 13%, gas prices were down 8%. Shipping more helped cushion the overall impact. And they were lucky. The price of gold rose 12%, offsetting some of the other falls. Global container shipping freight rates eased an insignificant 1% last week, holding very high. The same causes are in play. That is extending sailing time and fattening shipping company profits. Bulk cargo rates, though, fell 9% last week. The US Treasury 10-year yield is now just on 3.98% and down a sharp 12 basis points from yesterday. And the price of gold will start today up another $9 at $2,435 an ounce. But oil prices are down $1.50 at $76 a barrel in the US, while the international Brent price is just over $79.50 a barrel. And the Kiwi dollar starts today up another 10 basis points at 59.5 US cents. Against the Aussie, we were 40 basis points higher and 91.5 Australian cents. Against the euro, we're up another 20 basis points at 55.2 euro cents. That all means our trade-weighted index starts today at 68.7 and up 20 basis points from yesterday. And the Bitcoin price starts today at $62,304 and down a very hard 6.4% from this time yesterday. Volatility over the past 24 hours has been high at plus or minus 3.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.